But the housing market is starting to show signs of instability. Many potential home buyers are now sitting out the housing market. The volume of mortgage applications last week fell to the lowest level in 4 years. That's according to the Mortgage Bankers Association. And only 13% of Americans say that they plan to buy a home within the next 12 months, marking the third straight quarter in which fewer people expect to become homeowners. That is according to the National Association of Home Builders. And home prices rose at the slowest pace in nearly 2 years in August. That's according to the latest S&P CoreLogic Case-Shiller report. And famed economist Robert Shiller, whose research helped develop the index, says that the housing market now reminds him of 2006, just before home sales fell off a cliff. Joining us to discuss is David Dworkin. He is the CEO of the National Housing Conference. And Dworkin has a long history with the U.S. Treasury Department, where he most recently served as a senior housing policy advisor in the Office of Domestic Finance. Thanks for being with us, David.
Thank you, Michelle. Thanks for having me.
Falling off a cliff. Some pretty harsh words from Shiller there. What is your outlook for the housing market?
Well, far be it for me to argue with Robert Shiller on housing prices, but I think that what we've had is a very long, slow recovery that has got us to a place where we were before the housing crisis. And we're likely to see a plateau at this point. I don't think there's a cliff here, but we're probably not going to see housing appreciation. There's still a lot of defects in the housing market going back to the housing crisis that haven't been fixed yet.
What role is the Fed having in continuing, if it continues to raise rates, what impact do you see that having on the housing market?
Well, there's no question that raising rates is going to have a negative impact on housing, particularly on purchase mortgages and refinances. We've seen a lot of refinance business dry up, but it's important also that the Fed not let the economy crash, and so their role in having the throttle on the economy is also very important in all of this.
We are getting some mixed data. However, we're seeing that home ownership for Americans under 35 actually jumped to the highest level in 5 years, 36.8% in the third quarter. And that it's attributed to higher wages. Now, that is still below the historical norm of 40% for that age range, but it is an encouraging data point.
It is, and millennials were very slow to come back into the market. We're seeing them now at a place where they can't put it off any longer. You know, when you're in your two-bedroom apartment or your one-bedroom apartment and the second child comes, it's time to get a house.
It's time to get a house, but easier said than done. I mean, as we're saying, even though we're seeing the rate of appreciation in terms of housing prices perhaps slow down a little, home ownership is really out of reach for so many Americans. Why is that?
Well, there's been a couple of things. One is that millennials often have non-traditional jobs where they may not be paid with a W-2, and we have made it a lot harder for people without those W-2s to get homes because of the abuses of the crisis. And we also have rates are rising now. They were late to come in when rates were very low, and credit is tight.
You know, part of the American dream was home ownership, and it seems as though it's less and less attainable in the U.S. It's now on the low end in the developed world in terms of the percentage of homeowners in the country. But you think that this is an area that there could be some bipartisan success?
Absolutely. I think we've seen a lot of members of Congress on both sides of the aisle hearing from their constituents, not just about extremely low-income people whom we need to help, but there's a continuum from renters and home buyers. It's all very related. And they're hearing people say, why am I still living with my parents? Or why can't I afford to buy a home? Or how am I going to afford my home ownership costs when I don't have retirement savings? And so members of Congress from both parties are hearing about this, and they're coming back to Washington. We're actually going to be having a conference with many of them in a couple of weeks in Washington, D.C., to talk about what are some bipartisan solutions.
So what are some of the proposed solutions that you think could gain traction?
I think one thing is we should stop thinking about home ownership and renting as a zero-sum game, because when we have lower home ownership, we have more renters, and we have more renters, we have higher rents. So they're very tied together. And one of the proposals that's been a bipartisan proposal by Senator Orrin Hatch and Maria Cantwell, the senator from Washington State, has been to increase the affordable housing tax credit so that it's more available and we can build more units. We don't have enough affordable units out there, and people who have good jobs have not been able to afford to either their rent or to buy a home.
David, some would argue that it was the government involvement in the form of Freddie Mac and Fannie Mae that actually helped bring on the subprime crisis, and are reluctant to see too much government involvement in a free market. What do you say to that?
Well, I think that the problem with Fannie Mae and Freddie Mac wasn't that they caused the crisis, it's that the reason they were created and given the benefits they were was to avoid a crisis and help prevent it, and they did not do that. But they were basically the last lemmings to jump off the cliff, and we've got to resolve the problems in our secondary mortgage market. We've got to take Fannie and Freddie out of conservatorship and make them work for the American people again.
Let's hope that happens. Thank you so much for being with us, David Dworkin. Appreciate your insight.
Thanks for having me.